Hello, good morning to most, good afternoon to others, a good evening to the viewing audience across the pond. I'm your host, Jason Miles, here for another episode of This is Revolution Podcast. We're doing a special episode this morning. Sometimes I don't want to do a pre-record because you people complain. Oh, is this pre-recorded? So we're just going to do it live. While this is an early morning episode, we will be back again at our regular time at 6 p.m. Pacific, while I'll be speaking with Current Affairs magazine editor Emily Topping about her latest article on selling out. After the show is over, we'll be heading into the champagne room. That's right, doing 1, 2, 3 shows today. So if you dig listener-supported programming that we have here on TIR, think about becoming a patron. For as little as $3 a month or $30 for the year, you can make sure TIR can continue this breakneck pace of shows. Speaking of shows, show today, the debt bomb is about to explode. The second act of Donald Trump has proven to be a massive departure from his first foray into electoral politics. As predicted here on this show with our very own Deep State Cuba, Trump has filled positions with loyalists as well his court stacking. Some see the current administration as the United States neo-fascistic turn, but his economic policy seems to be more of the same neoliberalism, just with a MAGA patina. The Donald's famous catchphrase, "You fired," from his days as the no-nonsense corporate overlord, was replaced with, "You get a tariff." Trump dispatched tariffs like Oprah gives away cars, with reckless abandon. While much of this tough tariff talk was just bluster, one of the things the focus on tariffs has done is take away from the massive debt burden the country is dealing with. From our guest's latest article in Compact Magazine titled "America's Exploding Debt Bomb." Quote, "Attention needs to shift to the national debt load because it is this, not the trade deficit, that ultimately underlies the economic, political, and cultural malaise through which the United States is living. The numbers are grim. The debt-to-GDP ratio has remained above 120% since 2020, higher than it was at the end of World War II. The national debt is set to hit $40 trillion in 2026, up from 530 billion in 1975. Meanwhile, the 10-year Treasury yield, a key benchmark for everything from mortgages to business loans, has climbed from a pandemic low of 0.6% to more than 4.5%, driving up the cost of credit across the board, pinching ordinary Americans in the form of rising housing costs and inaccessible credit. Bond yields have continued to rise even after Trump softened or paused some of the tariffs. The numbers reveal a feedback loop of dysfunction. As lenders grow nervous that the U.S. tax base is too weak to sustain its obligations, the Treasury struggles to sell bonds without offering lower prices and higher yields. This translates to more interest payments, which are already the second largest item in the federal budget. The average interest rate on repaid government debt was 1.7% in 2020, but has risen to 3.3%. That might not sound like much, but 1% of 30 trillion represents a $30 billion jump. Refinancing 9 trillion in bonds in 2025 at these rates will siphon money away from everything else, while chaining future generations to a perpetual repayment treadmill. Unquote. What does this all mean for the American economy, with the Supreme Court allowing the mass firings and thus continued gutting of government agencies? Will more privatization really be the economic answer, or are we on the pathway of becoming a post-Soviet oligarchy situation? I don't have the answer to these questions, but here to discuss this with me is British Marxist and author, coming all the way live from a very hot United Kingdom. Please welcome Ted REESE.
Hi, Jason. Thanks very much for having me on.
Thank
I am,
you.
as you say, absolutely sweltering here. I can't cope.
Well, what sucks when you live in a place that's never really hot is that there's no air conditioning.
Yeah, I mean, when we get plagued with snow on the odd occasion, we're completely unprepared for that as well. and vice versa now that it's the summer. But honestly, it's never been this hot here. I can't remember it being this hot here, and yeah, it's hard to sleep at the moment. For one
I know,
thing.
I know. I live in Mexico, also somewhere with no central air. So when it doesn't get too hot where I live, but I know I know your pain. Put it that way.
Yeah, we're just not used to it. So I don't
Um,
know how we're going to do anything political here because everyone's just lying around dying.
just trying to, and you guys don't have water parks either.
Not really, no, not many. And we used to have a lot more public swimming pools, but of course we don't have many of those anymore.
Damn. This is just one of those moments where kind of the facade of the failures, right? It's all for people to see now.
Yeah, afraid so.
Ted, the Trump tariff tirade, is it designed to obfuscate the growing debt bomb you discuss in your piece?
I wouldn't say it's designed to obfuscate it. I think he's trying to offset it with the tariffs policy because I mean when we talk, obviously I talk slightly differently in Compact than I do on my podcast, on my YouTube channel, and in my independent writing, because obviously I talk a bit more explicitly about capitalism, because the debt is a manifestation of the key problem with capitalism. And to simplify it, in case people don't exactly know how capitalism works, but if your economic system is based on producing commodities and selling commodities for profit, that means you've got a growing economy, because profit is growth. Without growth, there's no profit. So you have to have an economy that's growing. And anyone who pays a bit of attention knows this, because politicians and bankers are obsessed with GDP growth, gross domestic product growth. So they want it to be 2 or 3% a year to keep things ticking along nicely. But in Marxist terms, or just talking about capitalism, we're talking about capital accumulation. So it's the same thing. Profit needs to grow, capital needs to accumulate. But if you've got there's a core contradiction with the problem with the system, which is that when you make commodities faster in less time, as tends to happen with innovation and industrial expansion in general, you devalue commodities, which means you end up with an underproduction of profit or value over time. And this manifests in the debt. The debt rises as a substitute for that sort of underproduction or lack of value and profit. And so with the tariffs, he's really trying to do a few things. He's trying to keep more value in the country rather than it leaving through exports, or through imports, money going out of the country to bring imports in. So he wants to force foreign companies to set up in America, so that value stays in America, goes to the American state, and therefore boosts the US tax base, which capital and commodity producers are increasingly dependent on. Because, and getting to the point you were talking about, privatization,
Mhm.
if you've got this underproduction of value being produced by the private commodity producing sector, one of the ways to offset that is to privatize public assets and public wealth. And that's what we see more and more over the decades, is just that ongoing process. So tariffs, if you can, if the state is lacking in revenue, you can basically introduce the tariffs to charge domestic producers and domestic consumers as a way of trying to bring in more tax revenue. But of course, it's a rather desperate measure, because of course, one of the things people will do is they'll just spend less money,
Mhm.
so they don't have to pay those tariffs. So it's I can see why he's doing it from his point of view, and I can see the motivations behind it. But of course, it's a big gamble for him, and we don't know exactly how it's going to play out. But yeah, I wouldn't say he's trying to obfuscate the debt. I would say he's trying to offset it.
Do you think it's kind of an oversimplistic way to try to offset this massive debt bomb, though?
I mean, it is, because the only way it's really going to be offset is if you actually start taking the economy under public ownership.
Yeah.
Because ultimately this all stems from private production. Like I say, you get the underproduction of profit just through general expansion of industrial production, if it's commodity production. And then this underproduction of value manifests in surplus capital, or what Marx called overaccumulated capital, that just can't be invested profitably. So it's literally uninvestable because it's unprofitable. And you can see this best of all, the one that I keep pointing to is if you look at US money market funds,
Mm-hmm.
the amount of money capital being stored in in the money market funds rises very steeply before every recession, and then peaks during a recession, because the recession subsequently devalues capital. Subsequent to that devaluation of commodity capital, capital in general devalues, and then that makes it affordable again. This is expressed through panic selling on the stock market, in
Mm-hmm.
retail, and what have you. And that makes some of that capital that couldn't be purchased before, couldn't be invested in before, repurchasable and profitable again. So you see, if you look at money market funds, you see it's very, because obviously you're zooming out more and more over time, but before 2001 is where you really see it start to steepen. I'll go that way. Where you start to see it steepen, then it sort of cools for a while during the recession, and after the first couple of years of the recession, then it starts climbing again. Same happens before 2008. So you can see this very clear, compelling correlation. Does the same before 2020, and it's doing the same now. So it goes higher every time,
Mm-hmm.
peaks during the heart of the recession, falls a little bit, goes up. But yeah, it's sort of this ever steepening amount of capital that just can't be reinvested. So they offset it through privatization, deregulation, anything that gets in the way of, adding revenue to the bottom line of profit margins. And of course, the state needs to stay afloat as well in terms of its tax base, because so much of that tax is needed to subsidize capital, whether it's fossil fuel companies or weapons manufacturers or what have you. So yeah, you could say it's simplistic, but from the capitalistic perspective, when all other options are sort of almost all but exhausted, I think the tariffs were going to come in inevitably at some point. And if you look at the Great Depression, the US government, which was a right-wing government then as well, started doing the same thing. The only difference is they did it after the Great Depression had started, whereas maybe we haven't quite entered one yet.
Is it kind of a fool's dream, though, to really believe that Trump can bring industry back to the United States of America? Like I said, I live in Mexico. I live in northern Mexico, where a lot of car manufacturing is done. Um, and knowing how much people make per hour or day here, the difference in the minimum wages it's a vast sea of difference in how much people make here compared to the United States. Why would the capitalists want to move? First of all, if you have the capacity to move a factory, that's a big build. But let's just say there's an abandoned one somewhere that you can refurbish and fix up. Um, why would one want to move that production capacity to somewhere where you're going to really cut into your profit margin that you've been so used to for the last 30, 40 years?
Yeah, that's a really good question, and I think especially the fact that Trump's style is so scattergun and chaotic and aggressive is to put it lightly, is also a turnoff, the one incentive is, you know, the US market is the biggest consumer, and if it threatens to cut you off completely, which is what the tariffs are designed to do, then that's going to be the motivation. So it will depend on if you can find another market or markets, and obviously they might be able to turn to China as a, you know, China's starting to become more of a consumer market, and then some of the other BRICS countries as well. So obviously companies are going to want to diversify their customer base basically, and that's probably the most sensible thing to do, because putting all of their eggs in the US basket right now is going to be hyper risky because of Trump, particularly because of Trump's style. Because I don't want to say everything is 100% down to, you know, the natural workings of capitalism. There's certainly like things that people do that affect it and manipulate it in certain ways. And, you know, Trump's tariff policy might have been more successful if he'd gone a bit softer and a bit slower, for sure. But yeah, the lure of the US market and its consumer base is still very, very strong.
The Supreme Court overturned the stay in some of these mass firings done by the Doge Department of Government Efficiency in the early days of Trump 2.0. What does this mean as far as this administration and the GOP's goal to do away with the last vestiges of the New Deal and Great Society programs, in your opinion?
That's really complicated. I mean, the aim ultimately is to reduce state spending so that they can get this deficit down and the debt down. When I say the deficit, I mean the annual amount of debt relative to the amount the amount of government outgoings compared to the revenue it's bringing in from taxes. So that's the annual deficit, and then obviously that compounds the overall national debt each year. Obviously, so they want to get public spending down. Again, what they're doing is basically transferring public funds. You know, they're cutting away public funds so that that can be spent on private capital instead, to prop up the profitability of capital where it's suffering from this underproduction of profit. So obviously, what's encouraging about the failure of Doge is that the resistance has been too strong in terms of, you know, anyone who's relying on money spent by the government has been able to resist it to a certain extent, in terms of, you know, people who need social security and Medicaid, but they still have carried through big cuts, just not as big as the right, or well, not as big as Trump wanted, obviously not as big as Elon Musk wanted, and there are people even further to the right than those two who wanted to see those cuts even deeper. But the other problem they've got is it's not just spending on the public through Social Security and Medicaid. You know, it's expensive to administer capital and to service capital and to subsidize capital. So the you know, capital itself is very dependent on the bureaucracy of the state, because it costs a lot of money to protect intellectual property, you know, for example. So there's things that are inherent to the system that, you know, if they just slash away at it, they're going to actually undermine, at some point, they're going to completely undermine their own basis of existence. And this is the big problem that capitalism has. So it's caught in this rock and a hard place between, you know, what can we cut that will improve the bottom line of corporate America, but what can't we cut? And there's a hell of a lot they just can't cut.
Are you dealing with something similar where you are in the UK as far as cutting public services?
Yeah, so I don't know if the same word is used in the US, but we've had what what they called austerity since
Mhm.
2010. In the wake of the 2008 financial crash, so that was the justification. It was very much we've all got to tighten our belts,
Mm.
sort of rhetoric, and but all it was it was cutting public services, so less spending on public transport,
Yeah.
welfare,
Mm.
hospitals, education, childcare, all of those sorts of things. But it was just a transfer of wealth from the public to the private sector, and we've seen record profits again and again for private companies that are based in the UK. And apparently austerity finished a few years ago because there was a bit more borrowing, basically, that allowed a bit more public spending. But essentially, like if for anyone who's working class and lower middle class, we've felt like we've been in austerity the whole time. And we've got the Labour government now, which isn't quite as bad as the Tory government, mainly again because they're borrowing more. But a lot of the borrowing they're doing is to help businesses, which does, if you can help some businesses, that will help some people to get jobs, and that
Mhm.
can be beneficial. But the Tories are a bit more, they don't even do that because they want more monopolisation, even more monopolisation than I think Labour is in favour of. But Labour is still like totally in hock to US capital, especially like BlackRock. Like BlackRock is almost writing a lot of Labour policy, from what I've read, and I know it does a lot of, I know it has a big say in what the Federal Reserve does in the US. So, and the last 3-4 years since COVID, the inflation's been crazy here, and we're not doing well here at all. It's the fact that the politicians want to say that we haven't been living through austerity or even a recession, because of course we haven't had an official recession since 2020, but it's been a recession for most people. Most of the country has experienced economic decline, and it's just that the wealth, all of the growth that is occurring is being sort of raked in by the top 2 or 3% of the population, basically offsetting that and stopping it from being an official technical recession.
Well, that kind of gets into my next question for you, which I thought was interesting as you brought up in the piece. We've been warned about the dark, unregulated world of crypto, right? But is it really a better investment than U.S. bonds? What does all this mean for the strength of the U.S. dollar? There are people that voted for Trump with the understanding that his regime would be good for the economy, but groceries are still expensive in the United States.
Yeah, cryptocurrency is, you know, it, capitalism for me is a big Ponzi scheme as it is. It's very much, the wealth that is um, works its way upwards. That's how the system works, or most of it works its way upwards, and therefore centralizes into fewer and fewer hands. And I just think that this is particularly true on the stock market, because it's speculation. It's mostly fictitious capital that's being generated. When trillions of dollars are wiped off the stock market, I mean that money didn't really exist. It's like the price of baked beans in the stock market going down. Like no money actually went
Changed
anywhere.
hands. Yeah.
That but what happens is a lot of on the stock market is a lot of the sellers, sell in a panic because they see the price falling, and then those stocks are gobbled up by the richer traders on the stock market, and that's one of the ways that capital and wealth gets centralized in the system. And as far as I can tell, cryptocurrency is an extension of that. It's hyper speculation. Obviously, you can make some money out of it if you cash out in time, but it's just similar to the stock market, really. Only it's even worse because, at least on the stock market, you are often investing in productive companies, in terms of productive commodity producing and therefore value producing companies. Whereas cryptocurrency, it's just assets, but it's only better than treasuries if the return is potentially higher. So, and that's just a case of assessing
Is it easier to
your
game though,
portfolio
Ted?
day
But is
to
it
day.
just is
Sorry.
it is it easier system to game? Like Trump has a meme coin. His wife has a meme coin. These things have been quote unquote sniped. So it feels like I, we've heard so many analogies about living in a dystopia, and this comic book villain is the head of the United States, but there's been a lot of comic book villains that have been the heads of nation states over the last 30 years. And the fact that he has cryptocurrency kind of feels like, what's next, man? A prepaid debit card? Like,
Well, that's a good idea. You want to run that by him. He
Let
might
me
give you
keep
a
my
bit of
mouth shut.
commission.
We found someone said yesterday, and I didn't believe it was real, and this is a little bit of a divergence to what we're talking about, that someone had proposed a game show to Donald Trump. And this person didn't just propose a game show to Donald Trump, they proposed it to Obama and Biden
All
and
right.
Trump. There was just issues with the Biden and Obama presidency. Trump has floated they've all floated the idea, but the game show was to do kind of a survivor type thing for your citizenship.
Oh God.
Exactly. Um, the fact that you write, and you're not the only person to write this, that crypto is a better investment than bonds. Also, for the mega wealthy, buying sports leagues. Again, as you know, in the United Kingdom with FIFA, buying sports leagues
Yeah.
is a much better return on investment than anything else, than any other sort of media. Don't own a record label. Don't own a TV studio. Own a literal league.
Yeah,
So,
because it's you've got such a dedicated fan base,
mhm,
and you've got so much you can do with it. In terms of merchandise, tickets, or anything you can think of, really. And it's funny because that industry is just going the same way as any other, and people sort of are surprised because they think it's sort of pure and just something outside of the rest of the economy, but it works in exactly the same way, unfortunately. Yeah, bonds are just the thing with bonds is it's the long-term bonds,
yeah.
you know, they are going really sky high. They're going back above 5%, which just means investors are losing faith in them. So they're selling them, and the state is actually having to do sort of remarkably high levels of buybacks in bonds at the moment, um, because no one else is buying them. They're trying to sort of maintain their value, and it's the same with companies in general. Apple is very no, Apple's notorious for buying back its own stock to kind of like inflate its value.
Mhm.
And this is like, stock market record highs and all that stuff. But if you look at an inflation adjusted version of the stock market, it doesn't, it's hardly grown whatever. It's not, it's like without inflation, it looks like it's doing this, but it's actually been doing that. So it's all like, like I say, it's fictitious. A lot of it's just fictitious capital, and it's such a heavily debt-based system now, and that debt can't be repaid. This is the problem, going back to the core issue.
Yeah.
The state can't repay that amount of debt, and we as a population can't work it off because there's just too much of it. The economy, the debt to GDP is 120%, so we're not keeping up, we're just not, and it's only going to get worse because it's compounding. So as I say in the article, the rate of interest goes up because the investors are getting nervous that the tax base is too weak to pay off the debt. So they stop lending or lending as much to the state. So interest rates go up, which makes the debt that the state needs to repay more expensive, which adds to the overall debt pile. So it's just a snowball effect. And essentially, there's no way out. And they're just kicking this snowball down the road with more and more privatization of public wealth. That's all down the mountain.
I mean, right before the show, I saw an article that Trump announced some new tariffs on Brazil, and Lula is extremely pissed off. As you were saying earlier, this kind of seat of your pants way to do foreign policy is a bit of a shock for the rest of the world. Does it also make the rest of the world not want to deal with the U.S.?
Yeah, I would have thought so. I mean, look at Russia and the Russia-Ukraine war. So that you put a load of sanctions on Russia, but that just played into the hands of China, because since then China's foreign trade is mostly now denominated in Chinese currency, whereas before it was in US dollars. So that's backfired. But this is just kind of symptomatic of the whole thing, because, like I say, I think tariffs were going to be sort of inevitable, an inevitable phenomenon that would come back. And I wrote that back in 2018. And it's the same with sanctions. Like, you've got US imperialism. It's got this surplus capital. It needs somewhere to invest it, so it invests it overseas. So it's been doing that more and more over the decades. It's got an empire of all these investments that its economy depends on, and it needs to maintain that profitability. So it has military bases all over the world to advance and defend these investments. And then if any of these nations start acting up, if they elect a government that wants to renationalize one of these industries that the US is presently owning, then one of the weapons is sanctions. So this is one of the sort of weapons in the US's armory. But some will, for the longest time, like most countries, have just sort of capitulated when the US has offered sanctions, has tried to impose sanctions. But more and more, we're actually seeing people or other countries being able to sort of circumvent them because of the rise of China, basically. China's sort of giving them another option that didn't exist before. So instead of capitulation, we're seeing resistance, but it's resistance based on having an alternative. And yeah, the US is definitely, obviously, making itself more and more unattractive. And obviously when Trump gets in, it's worse. But I still think it was happening before, because China's been probably the biggest trading partner for most countries in the world for over 10 years now, nearly, maybe. And then, of course, everyone was fed up with the US. Well, they've been fed up with the US for a long
For a
time, but
minute.
especially since Iraq and Afghanistan, and Libya and Syria. It's all backfiring. And
Somalia.
yep, absolutely. And
Haiti.
Yemen, yeah. And
Yeah.
I think if you look at surveys about who's the biggest threat to world peace, I think that the US is regarded as number one throughout most of the world.
That's fair. But I don't live there anymore. That being said, what does it mean for the new Cold War with China, where we're still trading partners with this country, and there is no more a threat of nuclear war? I don't think we're around the same age, but I'm 47, so I grew up, at the height of Rocky IV and all the good Cold War movies. We can't even manufacture that because, unlike the mysterious Iron Curtain, we love Amazon cheap shit and Temu in this country. We love dollar stores. So the American is suckling at the teat of Chinese production. You know, we're very comfortable paying $3,000 for the MacBook Pro, even though those little Chinese fingers are manufacturing it. We're not going to pay $7,000 for the MacBook Pro with rugged American hands making it.
Yeah, it's obviously very complex, and like you say, the US is heavily dependent on China. I think this is why, we've seen Trump backing down to some extent with China, and he obviously thought. I mean, it's difficult because, like I say, he probably thought that where he had leverage was probably in two areas: the fact that the US is such a big consumer market and people want to sell to that market, and secondly, countries don't want China dumping goods in their country, because obviously that's bad for competition in the domestic producers in those countries.
Mhm.
So he probably thought he could leverage those two things, and he thinks he still can. And obviously there's a lot of back and forth on what he's trying to do. But yeah, it's despite all that, it looks like it's going to be almost impossible for the US to decouple from China. I mean, for one thing, the US military is massively dependent on equipment and parts and components that it buys from China. So this is the irony of it all. It's all very intertangled and complex, and interdependent. And I mean, there are a few areas where the US might be able to innovate. Like they might be able to innovate, like new magnets for batteries and stuff, like by producing them in a completely different way. That means that they're able to wean themselves off of the sort of rare earth magnets that they presently get from China. But that's very uncertain, and it will take a long time to achieve that innovation. So in the meantime, it's just this sort of back and forth bartering over tariffs and trade deals. And all the while, China's actually the one that's preparing for the end of decoupling, probably more than the US, because it has that industrial base to rely on.
Yeah.
In terms of, you know, whether the US can rebuild its own industrial base, like the big problem of the day that I don't know why it just doesn't get talked about is automation. Like the right is going on and on about immigration and welfare, blah blah blah. But the main thing is that we're innovating production. And that's a natural, inevitable process because we innovate. That's what we do. That's what we do as a species. And it's also what we do as a capitalist system. And we're heading towards a fully automated system of production. I know that word, to use the term fully, is a bit controversial because what does fully really mean? But not talking in an absolutist sense, but we're generally getting towards a place where all production of commodities will be done by robots and automated machines and computers. And at that point, yes, there's still human labor, but we're overseeing production rather than acting as an input per se of production.
Does that take away our labor power?
Well, it doesn't take away our labor power because we still have the ability to work, but it devalues it massively.
Mm-hmm.
And it does make our labor, a lot of us, redundant. I want to be careful here because technology is not, because John Maynard Keynes come up with this phrase, technological unemployment, or I think was the phrase, where he was saying you're unemployed because of adjustments we're making to new technology. So there's new technology and we don't need you anymore, which means you're either going to end up unemployed or we're going to have to retrain you.
Mm-hmm.
But that's not really accurate. What actually happens is that you're unemployed because capital can't afford to employ you. So like I say, you get the underproduction of profit that's natural to expanding, accelerating commodity production. That produces surplus capital that can't be invested. And alongside that rises surplus labor that can't be employed. So in a capitalist system, you're unemployable because capital can't afford to employ you. The other thing that sort of is really compounding that is the fact that capital can't even afford to retrain us because it's got such a deficit of value, this essential problem. It's not just sort of bleeding us dry through the tax base, it's bleeding us dry by charging us for everything. Yeah. So you see more and more subscription services now, price rises, you've got to pay for your education. So if you lose your job and you can't afford to retrain yourself, you're screwed. Mm. And that is what kills your labor power. But what automation does is it requires less laborers per commodity produced. And this is exacerbating this underproduction of profit and value because capital's not exploiting labor to the same extent. It's not needed or required. So we then end up in low paid services jobs, which are low productivity jobs. And the problem just sort of compounds itself again. So yeah, that's kind of, and this is basically why we need a different economic system. We've come to the point where the innovation that capitalism can achieve is, more or less maximized, I think. And it's also just really warped because, it's all about generating profit. And to do that, you just have to do some really crazy stuff with the technology you're producing. Whereas obviously, I would argue that a socialist system based on the use of technology, the value comes from what it's used for, not what it can be, how it can make you a profit. That would be at least slightly less crazy world.
So in the socialist world, we can have driverless cars and not be poor.
Well, I don't know if we'd have driverless. I mean, that's one of the things, isn't it? Like driverless cars, is that a sensible idea? Is it achievable? And is it desirable in a socialism.
No,
That would be something. That would be the sort of thing we'd all have to sort of think
it's
about.
not. It's only desirable, right, in a world where you're trying to maximize profit.
Yes,
There's never
I
a
agree.
moment, right? There's never a moment in our lives that when we were looking at future movies that driverless cars were cool. Cars flew, but not even a robot drove the car in Total Recall.
Yeah, totally agree. Yeah.
Right? So the idea that we're gonna have driverless cars, it's so cool. Whenever I see someone get, I'm from the San Francisco Bay Area. I'm from California, and I'm going up this weekend, and in San Francisco, and I can't speak for where you're from. I don't know if they have these where you're from. I haven't been in your hood in over 10 years. There's these driverless like taxis, and whenever people get out of them, they look like they've just seen Santa Claus and Jesus fucking. They're just like, oh my God. Oh, oh. I'm like, why are you so fucking impressed by, like, what about this is impressive to you that you think this is cool?
Yeah,
Right?
it's kind of this as well. It's like this use it or lose it thing. So
Mhm.
like we've got this culture now that's sort of like overly sedentary, and I think like one of the things socialism would enable us to do would be to get robots to do stuff we don't really want to do,
Mhm.
but then we could actually start using our bodies again. Because like with a driverless car, you're not even using your arms, so your arms are like withering away and that sort of thing. Maybe driverless trains would be good, and we do already have that.
Yeah. Yeah. There's
But
Canada has those, yeah, airports, most airports I go to have some sort of driverless train system that seems to work just fine. That doesn't really freak me out as much as, San Francisco is a metropolitan city. There's people walking around. Sorry that I don't trust a driverless car to not hit a pedestrian. I know people that have hit pedestrians. So, thinking that a driverless car is not going to do it is retarded, and then thinking that like this isn't going to be massively horrible, being that so many people have been relegated to gig work, quote unquote. And I've always looked at the driverless car as kind of this fever dream to sell investors for the longest time. And whenever I go back up north and I see people get out of these things, I stay in a place called Chinatown, and there's a bunch of tourists, and there's all those things are just right, just so all over the place in Chinatown. And you're just like, that's really what impresses you in 2025. That's what you want. You want more driverless cars. Interesting.
yeah, I mean, obviously there's that dilemma for if a driverless car's about to crash, um, does it what more sort of what does it choose? Protect the car, or because it's expensive,
Yeah.
or protect the human? And in a capitalist economy, I think I know which one they're going to pick, especially one that's in such a bad a state as it is now. In this country, we've got like hireable electric bikes and scooters now in
That you
London,
rent.
and they're
Yeah.
just everywhere.
Yeah.
Like it's like you can't even walk anywhere without having to step over them. They're just dumped on the floor, and then you
Mhm.
can pick one up and tap your card on it if you want to use it for an hour. It's just like it's just trash world. It's just
It's yeah, the dystopia doesn't look exactly like science fiction promised us. The skies aren't always gray.
yeah, yeah.
Um, but brother, it feels so close. Um, we used to try to wreck those things when they first came out. Where we're from, I toured as a musician for years, and I remember we were in a place called Riverside, California, playing a show, and we found those things, and we were trying to jump off shit with it. We were just, but is this the max that capitalism has to offer us at this point? You can rent more things that you can do. We can innovate, quote unquote, uh, the modalities of your life Don't sweep your house. Buy this thing that sweeps your floor, kind of, sort of, but not really good enough in the corners.
Yeah, I mean, and that's the thing, isn't it? They'll just try and think of anything to sell you because this system is production for the sake of commodity production. So when we talk about, there's a lot of talk about we're now living with too much abundance, and it's true in that sense because the system, like the phrase that Marxists often use, is just production for the sake of production, but it's to be a little bit more specific, it's production for the sake of commodity production.
Mm-hmm.
So if you can think of a commodity that you can then produce to produce surplus value and profit, and all you've got to do is think about how to market it, which is why there's so many marketing jobs. Like if you can't find a job, you might find one in marketing. Yeah, so yeah, you think of any old crap, think of a way to sell it, give it the corporate shine, and job done. But it's making the world look like crap, to quote the Pope a little while back, and it's also just completely destroying the environment because
Mm-hmm.
the system is commodifying nature quicker than nature can replenish itself, which is the source of the environment crisis and the climate crisis.
Well, in closing, thank you. First of all, thank you for taking the time to talk with me, Ted. I appreciate that.
I appreciate you having me on big time.
Um, what is to be done with this debt bomb? What can be done if tariffs aren't the answer? Um, if trying to slash more government spending isn't the answer, and it looks like we're going to see more slashing of government jobs now, which is kind of terrifying.
Yeah.
What do you think the next step of the Trump administration is, and what might that mean for the world?
Well, the system will go into crisis. We would sooner or later there will be an actual recession where it's a technical recession where the whole economy is contracting, and that will push things in either one of two directions. So you'll either get a big swing to the left or a big swing to the right, or you'll get one and then followed by the other as things progress. It's just kind of really an intensification of what we've seen before. So they'll try to, like you say, they'll try to cut more government jobs. They'll try to cut more spending on Medicaid, just because these expenses are essentially becoming unaffordable for the state. It's like we haven't been able to talk about MMT and that sort of thing, but like MMT is really not
It's not it.
got a good handle of what's actually going on,
Mm-hmm.
because we're talking about real value and how it's distributed. You can't just thin that value out of thin air. You can't just conjure that value out of thin air. It comes from commodity production, and then it gets distributed through the economy, and the capitalist class is constantly trying to sort of redistribute it upwards. So yeah, the spending cut, the public spending cuts. What you'll also get is a lot of bankruptcies, of course, and then the state will not only cut public spending, but it will cut spending on subsidies for some capitalists. So some capitalists are going to lose out. Um, Trump threatened to cut subsidies to Elon Musk after they fell out. So that sort of
Yeah.
thing could happen.
Yeah.
Um, and then the the trade wars with China will intensify. The war drums will be beaten harder by those who want these wars because represent a profitable opportunity. If you're a weapons manufacturer, you're constantly lobbying for contracts with the government, and you're more likely to get them if there's a war going on. And yeah, it's hard to say exactly what's going to happen next, but everything we've experienced in the last 20 years is probably going to intensify very heavily. And I see a lot more inflation coming because interest rates are going to tend upwards. You know, the one thing that we had going for us in the last 40 years was that interest rates tended to decline towards zero. But in 2008, they hit zero, and there was really not much more. You know, they couldn't really go any lower.
Mm-hmm.
So now they're going back up because investment is just becoming that unprofitable that you know, borrowing money and lending to the government is becoming unattractive. So unfortunately, that's where we are. And ultimately, the solution is to build a party that stands for the public ownership of the economy, because, as I say, capitalism is just coming up against the sort of limits of innovation that it was ever going to be capable of.
His name is Ted REESE. Wherever you are watching or listening to the show, there is a link in the description to his latest article in Compact Magazine, America's Exploding Debt Bomb. Thank you very much, Ted. I hope it cools off for you in the UK
much.
soon. And have a good rest of your evening, brother.
You too. Thank you.
Peace. Again, wherever you're watching or listening to the show, link in the description. I will be back later this evening to hang out with y'all and Emily Topping of Current Affairs Magazine, where we'll be discussing her latest in current affairs. I think it's called Why We're So Comfortable with Selling Out, or something along those lines. But Emily and I both wrote about selling out around the same time, independent of each other, of course. And I'm excited for that discussion. And after the discussion, Emily and I will be going into the Champagne room, possibly joined by MT as well, for maximum yucks. Thank you guys. And I am out.